Good afternoon, traders. Today is Tuesday, October 15th, 2013, and I wanted to give you a trade update. Since we're talking, about how to trade spreads in this module, I wanted to give you a real live example of a recent calendar spread trade that I made on Apple. So I actually have my monitor tab here queued up, and I highlighted the trade that I'm going to talk about, and you can see here it's an October-November 5-10 calendar spread. 15 contracts, and you can see here that the sold 5-10 calls have 3 days left, and then the long November 2013 5-10 calls have 31 days left. So the trade as a whole, if I highlight it, both of these individual option legs have to be highlighted to get the total value of profit or loss. So they're highlighted. You can see that the position is up right about $5,600. Today it made $1,000, and I want to talk to you about the importance and the power of trading spreads, specifically time spreads or calendar spreads. Same definition there, is you can trade them in all different types of markets, and you can have the ability to profit even on big down days. So you can see here the futures change. The Dow is down 125 points and the NASDAQ is down 12. Apple's pretty much flat. Yet I'm making money. This trade is making $150 a day in theta, and it's just further proof and further clarification that this does work. You have to stay at it. You have to put trades to work. And if I go back, and you're probably thinking, how long did it take for this trade to manifest this profit, which is now up to $5,800? But if I go to my account statement, you can see here that I purchased 10 of the 15 calendar spreads on Apple on October 1st. So today is October 15th. You can see up here, just 2 weeks since I put this trade on, and it's already made almost a $6,000 profit. Now, since I'm kind of going off the cuff here, I want to give you just some real live data as far as the return for this 2-week investment. So 15 contracts was the total calendar spread amount, and you can see here that my debit was $7.30. So if I take 15 times 730, it's roughly a $10,950 trade. We'll say $11,000 including commissions to put this trade on. So in 2 weeks, the stock, when I put the trade on October 1st, you can see here, this is a chart of Apple, a 1-year chart. If I zoom in, let me just resize this so we can all be on the same page. But you see my cursor down here, it says 10-1. 10-1, the stock was trading right about 480, 485-ish, so say about $10 or $15 lower than where it is now. It's kind of been sideways the last 2 weeks. It's kind of popped up a little bit the last few days here. But you can pretty much understand that if the stock was trading at 485 and it's up about $15 since then, what does that equate to? Maybe a 2 or 3% increase in the stock price. So, this is an example of, you can buy the stock and make a couple percent on your money, or if you know how to trade, defined risk option spreads, such as a calendar spread, you can make, 50% on your money in 2 weeks. Because this trade that was a debit for $7.30 per contract, or really per leg, buying and selling, is now can be sold. If I go to my account position, I can sell these today for $11.40, and I'm going to do that. I'm doing this for you here today. I was going to hold on to it for a few more days, but I want to go ahead and show you a real live trade in action, showing you the possibility, showing you the insight and really the proof that when you are trading options and trading stocks, you're going to have a whole different amount of positions. But the most important thing is, starting to take off profits as you start to gain them. So in this example, buying 15 calendar spreads on Apple, earnings. See, my original plan on this trade was to make a lot of money on these sold calls, be able to stay long a good portion of these November 5-10 calls as kind of a speculative play. Since I've made 5,000, I can take maybe 4 or 5 of that profit, 4 or 5,000 of that profit to hold through an earnings call, which is coming up the end of October. Kind of a riskier play for me, but this account and this specific trade was put on to kind of allow that. It's kind of like a free gamble, so to speak, because I don't really advocate trading spreads or trading options through earnings unless you specifically have a plan and you understand the risk at hand. So I would say that it's okay if you trade through earnings if you have a position on like this calendar spread here where you've already profited. Let's see here. So what are we up to? $5,900. I mean, it's okay to spend a little bit of that profit to hold through an earnings call to potentially make more. Not really a big deal. It's actually kind of, the whole risk-reward mindset. Are you willing to risk, half of your profits to potentially make, an extra 10,000 or so going through earnings? Just to give you an idea of when the earnings is on this and why I put this trade on. And I do have other trades on Apple, so it's not that big of a deal if I close this one out today because I have a couple different accounts that I have some positions in Apple in. But you can see this little red icon over here is 1028 is the earnings call on Apple. So these November options right here, the 510s, now that you understand Vega and you understand some of the option Greeks, very high probability that these are going to go up in value moving into earnings. So if I'm long calls and the Vega goes up, that's going to be, a positive thing for me because the options are going to increase in value regardless if the stock moves. A lot of times when you go into an earnings call, the market makers are going to increase or jack up, they call it, the volatility, the implied volatility on the specific option trades that are, pretty much the front month calls or the front month puts for that example. So going to Apple, you can see here the November calls right now are trading at an implied volatility of roughly 31%. The next few weeks, it's going to be very conceivable these can go up, to 35 or 40, maybe even 50% the couple of days before earnings on Apple. So holding on to long calls through an event like that is not that stupid of an idea, especially if you have profits to offset the large time decay. I mean, these options that expire in 30 days, they decay very rapidly. You can see this negative 374 theta, which is very, very bad for holding on to that. So you have to understand your risk. But when you're long 860 Vegas, it's kind of a little bit of a trade-off there. So you just always understanding your risk and understanding your underlying option Greeks on a specific trade is very important moving forward. But just to move back to this trade before I get too sidetracked, and I can talk about trading in options for forever. I just really love it. But you can see this is the chart on Apple. Again, just as a recap, this calendar spread trade was put on right around here where my cursor is, around 485-ish. So I'm happy with the profit. I'm going to go ahead and sell a portion of it today because, again, we have 3 days until these sold options expire, and if you got a huge pop up to like 510 or 520, this potential profit on these sold calls could diminish. So I like what happened here. I'm happy with the profit. I'm going to go ahead and right click and create a closing order just to show you a live trade example. I'm going to go ahead and sell 8 of these. So I'll try to get the mid price is 11.11. I'm going to go ahead and confirm and send that. You can see the credit is $8,868. And if I go to the monitor tab, you can see that it's working right now. So we're just going to hang tight here. I want you to see up. Okay, so one of them are filled, and they just all filled. Okay, so there's a perfect example of how to take a profit on a calendar spread. I still have 7 left. I'm going to hold on to those probably through the rest of the week. Actually, I'll make it 5 left just to make it. I'll get all of my money back. So if I put out 11,000 on the trade, you see it's going up a little bit to 1120 there. Never going to get it perfect. Can't worry about that. But just for the premise of this video and this discussion, if we go back to the actual account statement, the beginning trade was 15 contracts. There's just 2 different legs that filled. 15 contracts at $7.30 debit, which is standardized to 100 shares, would be 15 times 730 is roughly $11,000 investment. So I just filled 7 of these at 11.11, and if I create a duplicate order just to give you the exact dollar amount, it was roughly, was it? It was roughly 8,000. Oh, there we go. Hold on, we're getting all these orders coming in. Let me just delete that, and we got the last two. So, all right, so everything's been filled, and just to give you a synopsis, it was 7, 8, 9, 10 contracts out of the 15 were sold for an average of, say, $11.14. So if I take 10 contracts times $1,114, it's roughly, that I pretty much am sitting on a free calendar spread right now because all of the outlay, my $7.30 debit at 15 contracts was roughly 11,000. I just sold 10 of the 15 calendar spreads for the same amount that I put out. So all of this right here is profit right now. So that's an example and proof of how to trade calendar spreads, showing you that I'm not only teaching it, but I am doing it on a daily, weekly, and monthly basis. Again, this is Tyler Schinelli with Option Trading Coach, and thank you so much for watching, and let's get back to the trading videos.